Just waiting for everybody to get on the screen and we're going to get started. Looks like we have a nice big group. Wonderful.
I had a little trouble getting on, so I hope the link is good.
I'm sure it is. There's plenty of people on. Eric, give me a thumbs up when you're stopping welcoming people. Okay, there we go. So welcome everybody to FACP's Grand Rounds. This is going to be a wonderful presentation by Catherine Eaton and Marianella Collado. We are going to talk today about the value of business valuations. The session is intended to cover essentials of business valuation in the collaborative process, including what constitutes a valuation and what is typically excluded. We're hoping that attendees will gain an understanding of valuation methods, commonly based on earnings and multiples, and learn how to evaluate appraisal benefits, valuation ranges, and business multiples. Today, we'll explore how to educate clients on the financial impact of valuation ranges and guide them into an understanding of how valuation outcomes could affect their personal finances. It's intended, this session, to be a bit of a presentation and then some questions and dialogue, kind of a round table. I'll tell you a little bit about our presenters. Catherine Eaton is an attorney. She graduated from Nova Southeastern in 1999. She's practicing family law as an attorney in Florida and Nashville. She's qualified as a Supreme Court certified mediator and a Tennessee Supreme Court mediator. And her experience as a mediator makes her uniquely qualified to help clients navigate the legal process and create desirable solutions. Catherine is an accredited collaborative professional through the Florida Academy through the FACP, and she serves on the board as a co-chair committee. She's an active member of the family law section of the Florida Bar, and she co-chairs a subcommittee to bring a 2-day collaborative training to the family law section. Marianella is a senior wealth advisor and the CEO and co-owner of Tobias Financial Advisors. She serves clients in a team setting by collaborating with them and their professional advisors to ensure overall financial planning and investment objectives in a tax-efficient manner. She received her BS in accounting from Hunter College in New York City in 2000. She has over 20 years of experience in the tax and financial planning arena. Before joining Tobias, she was a principal at Bessemer Trust. She is quoted in various financial and non-financial media outlets and is featured in articles related to tax and financial planning. She earned recognition and many accomplishments, such as Excellence in Finance Award of South Florida Business and Wealth, Hispanic Women of Distinction Award. She also is passionate about giving back to her community and serves as on professional affiliations, including the Collaborative Family Law Professionals of South Florida and the Florida Academy at the FACP Leadership Institute. And so we welcome everybody, and I'll turn it over to our presenters.
Thank you, Susan. So, as you know, we're presenting today on the value of business valuations. The way the topic came up was Marianella and I were just, Nella, as I'll call her, we're discussing, well, I asked her the question, when should my client get a business valuation? And anytime I suggest a business valuation should be done, my client cringes and gasps and is upset because they're scared of the cost and scared what that means and scared of a lot of things. So I was asking her, what should I say to my client to prepare them? And what's the analysis that needs to happen in order to determine whether the case warrants a business valuation and what are the options? So that's how this topic got started. And then we figured it out how to hopefully best explain it to everyone listening And so they will be better prepared when this issue comes up of whether or not to have a business valuation and what the options are, that they'll be able to better explain it to their clients and understand it for themselves as a collaborative professional.
Yeah,
So,
I think
Nellie, you want to kick it off? And do you have anything else to add as to how we got started with this?
It's funny because as we were brainstorming, I think we realized we can go on and on for, hours upon hours talking about, why this is so important and when we need to dive a little bit deeper. So let's jump in. And I'll first say I am not a business valuation expert. If we have some of you folks in the audience, please feel free to chime in. The reason why this is a conversation that I will often bring up is because when I'm brought into collaborative cases, my job is to be able to paint a picture for the clients of what is going to be the impact of all these decisions that they're making. And when there happens to be a closely held business as part of their financial house, it's almost an elephant in the room, okay? It could become the elephant in the room. And so oftentimes it's hearing conversations and people, well, I think it's this number. Well, the husband said it's this number. So rather than just us pulling numbers out of a hat, I think we should talk about what it is, what it isn't, when you bring an expert in, and what are some things you can do like high level. So that's gonna kind of be the approach we take. But please feel free to chime in. Catherine and I do want this to be interactive. We want you to get the most out of the topic, so feel free to chime in. So with that said, let's talk about what a business valuation is and what it isn't, because I've seen all variations of things presented when we get a balance sheet. I have seen balance sheets where it's not even on the balance sheet. And so because I love to, for fun, look through people's tax returns when I have access to them. And then we're saying, what is this flowing on Schedule E, right? Schedule E of someone's tax return is where any of pass-through items come through. So when we're seeing a name on that tax return, we start questioning, what is this asset? Who owns it? Have we obtained some sort of valuation for it? And then we realize that an asset was not included on the balance sheet. So what a valuation is not, it's not the cash that the business has on the books. Technically, that's already, and you can chime in more, Catherine, right? This is cash already in the books of the business, which technically is already a marital asset, correct?
Correct. And I would say you are looking at tax documents and figuring out that there's a business that exists. On my side, what I usually get is a financial affidavit by my client who most likely doesn't know knows the business exists because they know that their spouse goes off to work every day, right? And the question is, what is it worth? Or I have the other spouse who goes off to work every day and they put some number on their financial affidavit saying, this is what it's worth. And so I would like better to, before they start plugging in some number, I would like better to explain to my client what that number represents. So
correct. Yeah, and so I've seen all variations of here's the name of the business and here's the cash that the business has. I'm like, okay, well, that's cash that's already in the business. That's not a business valuation. Let's go ahead and pull that out as an asset that's already part of the pool of marital assets. Another thing a valuation is not necessarily the receivables. Those are already receivables. It's almost as, unless we can determine that those receivables are not really collectible, that's already an asset that's technically part of the marital pool. So what people often fail to realize is that a business, we have a lot of business owners here, sole practitioners, we have whole teams of people. So we have a variety of different businesses here in our audience, right? We run a business because we're generating revenue, and this revenue creates cash flow. So there's a value to this cash flow. And one key number that people often will ask about when it comes to business valuations is this EBITDA, which is earnings before income tax, depreciation, and amortization. That's generally the key number that a business broker is going to look at to determine how do we come up with a value. In my world, right, I own a wealth management financial planning firm. And so there are already some like key, rules of thumb on how businesses in my industry get value. It could be 2 times revenue, or it could be 10 times earnings, right? So it all depends. So based on that, I think what I'd like to make sure is that we're not business valuation experts, but our job is to look at these financial affidavits and look at the information provided to us by the clients and determine, is this reasonable how this person came up with this? Is this really a business valuation? So that's it. I just wanted to debunk what it is and what it isn't. And I don't know, I've heard a variety of, well, I am the business. If I'm not alive, there's no value. Well, I'm pretty sure someone would be willing to pay for that cash flow, right? So just because the owner is saying there's no value, that's, to me, I don't know how you feel about that, but I'm not sure that
my business, my professional, my law firm, there is no value without me. Maybe you could hawk my laptop. That would be about it.
Well, think about that though. If we planned ahead, right? If we planned for business succession, even a solo practitioner could find a way to extract value out of what they've built. Maybe we need to do a session on succession planning. That's going to be another presentation. But yeah, I mean, generally you've built goodwill, and that's why clients are coming to you and referring you, right? So that goodwill is basically what creates a value in a business. So moving on, you asked a very important question, right? When you mention the word business valuation, everyone cringes because they're thinking, oh my God, is that going to be a $25,000 expense? I'm already paying for attorneys, forensics, the mental health professional, right? Like they're already paying for a whole team of people. And then you throw in another little wrench in it and say, I think we need a valuation. So I think we should talk about this though, because that shouldn't be our first, that shouldn't be the first door we open. Because you're right. I mean, I've had clients who have spent upwards of 25, 35,000 to get a business valuation, right? So it could be a very expensive endeavor. But I think before we open that door, there are things that we can do to determine if it is necessary, right? So first, my job is, I would say, fun, because I get to lay out a lot of what you all have helped the client build, all these options, right? So you all get together and you come up with these different options. And then I take this information and I say, all right, well, if we go with door number 1, this is the impact to you for the next 20 or 30 years. Look, you will be fine. We can throw everything in the kitchen sink to it and you will still be fine, right? So that gives the clients a little bit of freedom to have more flexibility on how strict they want to be with something that may not be so clear, right? So if you get half of all the assets and you guys pick a number out of a hat for the value of the business and you're fine, maybe you don't need to pursue it further, right? Maybe you feel like, look, this is his baby. After we get divorced, this is all he's going to have because he's destroyed all the relationships with myself and the kids. So this will be his new family. So perhaps he goes, along his merry way with the business, and you're comfortable taking a number that you guys, for the most part, we pull out of a hat, right? So the first thing I would say is, first analyze the impact with a number that somebody came up. And if you're fine, maybe you let it go. But more importantly, I want to make sure that we as professionals make sure that we are doing our due diligence. And I told the one case I have right now, right? We have a fiduciary responsibility. to, at the very least, make sure that we're talking about it, right? And if the client chooses not to open that valuation door, then that's on them, but at least they were educated on what could or could not be. So I would say that first is look at the impact of having a valuation different than what maybe has been discussed in the room, right? By looking at the long-term financials. And then there's a very easy way to, at the very least, get a range. Business brokers or business exit consultants would be more than happy to give you a range of what businesses of that type in that industry with the revenue that it has, what range, what would the multiples look like? Is it 1 times? Could it be as low as 1 times or 2 times revenue or 2 times earnings? Or could it be as high as 10 or 15 times revenue? But at the very least, you've gotten a professional to look this up, because I don't know how many of you are aware, I was caught by surprise, but there is actually like an MLS, similar to looking up real estate. If you call a realtor and say, hey, I think I'd like to put my house in the market, what do you realistically think I could list it for? They're going to be able to go into their MLS and look at how comparable properties in your areas have sold. Same thing. The same thing can be done with a business. So at the very least, we get a range. I have a case right now where the husband did exactly what we talked about. He had put in his financial affidavit the business, and then put, I'm just going to round it, say he put $10 million value of the business. But he had next to it, bank so-and-so. So clearly what he did is he put the name of the business and the cash that the business had on the books. So I said, same thing. I did the same process. This is cash. This is not a business valuation. So when we went and asked a little more questions, right? What is this? Have you obtained the formal valuation? No, that's what the business has, $10 million in the bank. But when we went and looked at multiples, the range was 8 times revenue of a business generating like $4 million a year, all the way upwards of 30 million. Okay, so because the range got so big and the dollar amount was so significant, we couldn't in good conscience tell this client that it was okay for her to just accept the cash and not do anything further. So I think we need to put in perspective, right?
The problem I have, and I mean, when you've got a client admitting that there's $10 million or significant cash in the business, then it's easier to say, hey, we need to explore this further, and maybe we need to pay 25,000 plus or whatever for a business valuation. The problem I have are these smaller, like mom pop businesses that, and especially when the clients are putting their personal expenses through the business, and they're kind of living month to month. The money comes in to the business, and everything from cars and cell phones to internet to whatever is going through. There's a value there, but explaining what the value of the business is, especially when they're putting so many of their personal expenses through, and deciding what that value is, because spending significant money on a business valuation is scary for them, and probably their books aren't in order that would really tell you what the business is. I mean, you have to a lot of analyzing to even get there. So
yeah,
how to handle that situation, Ella?
Yeah, you're spot on. And I'm going to go back real quickly, because when I talked about EBITDA, generally, I've had the pleasure of going through many business exit planning for a lot of our clients, which deals with selling the business. So one thing that generally happens is that this EBITDA, which is, again, the earnings before income tax, depreciation, and amortization, there is a normalization of that number. They do have to clean up the book. So when you go sell a business, there's a lot of due diligence that goes into it to clean a business. So in our case, if it's a mom and pop, we would do similar due diligence, right? Is what expenses are you running through the business that are not, is Costco. So you go to Costco and maybe you got one ream of paper, but then you also picked up all your groceries and then it all went in Costco through the business. So there would be, those are good questions for us to ask, right? How did we come up with what this earnings is, and have we cleaned it up to adjust for things that would normally not go through the business? And that kind of goes on the other side of the financial affidavit for living expenses, right? Pull them out of the business and list them as personal expenses. That, the case in point, the case I have right now, there were a lot of expenses that they run through the business that once they get divorced, she's going to have to pay for herself. So we went through and literally added all these up and put it on her side of the ledger. So there is cleanup that has to be done. Even with small mom and pops, you'd be surprised, there is data on them. So maybe it is, I have a client who sells like all the little hardwares that go on the doors that they get packaged up and go to Home Depot. It's a mom and pop store that he started in 1940. Even that, believe it or not, I'm able to go to a business consultant or a broker and get a sense of what, these types of businesses would sell for. And then we look at the profit and loss and come up with a number. So now if we're talking about, a corner store bodega that maybe that makes $100,000 a year and maybe he nets 15,000, I wouldn't recommend spending a lot of time, right, trying to come up with a better valuation, because I don't think it's worth it, right? That's not going to move the needle that much. So I think we do have to put it in perspective, how much of an impact it's going to have to get a little bit better of a valuation for purposes of our project.
So what do you think about bringing in a business broker as a neutral to talk to the parties as to their experience, or to do some kind of basic analysis of the potential value of a small business?
Absolutely. We talk about allied professionals all the time, right? We don't have all the answers, right? You're good at what you do, right? I'm good at what I do. And together, when we bring all our brains together, yes, we can make magic happen in this collaborative process. But at the end of the day, we do need the experts that do this day in, day out, especially when it comes to evaluation. Like in one case, I told the client, you can absolutely choose to agree to accept X, but just know that this is the range. I just don't want the client to, in 2 years, find out that the spouse sold the business for 30 times revenue. Now, got a windfall, and she only walked away with 2 million, right? So that's where, could this come back to us as professionals because we didn't take the time to raise awareness of what could be there, and at the very least be able to document. We explained to the client based on an allied professional that we brought in, who was able to tell us that the range could be within this, and the client was comfortable accepting 2 million, right? Whatever the number is. So I think I always practice, and maybe I've been traumatized. I go to the Heckling Estate Planning Conference every year, and there's always like a session where they go through all the fiduciary cases. And this is everything that could go wrong in estate planning and how they deal with it in court. And so out of that session, they always say, always practice with litigation in mind, right? Someone's going to come back and say, you didn't tell me this, or this something, nobody addressed it. So I think it's a matter of, educating ourselves of what could be, right? Raising awareness to the client that they understand that they're accepting this, but that it could be here and we don't know because we're not experts. And then the return tells us so much. That's why I love part of the project I do during the collaborative when we're like wrapping up is I go through the prior year returns and I do a checklist of all the things to make sure that we picked up on all these little things that going forward, someone would have a question on like, what did they decide with these carryovers, or how is this getting allocated? The return tells us so much. So that's such a powerful tool to use in divorce. Well, I think the return is a powerful tool for all financial planning, but especially in divorce, because it tells us so much. I say like the tax return doesn't lie, right? Because this is you got tax forms, they had to be reported to the IRS. So for the most part, the tax returns are going to be really insightful on what the client really has going on from a financial perspective.
That's interesting that you say that, because in my mind, I say the tax returns are just what they say they are, but they're not necessarily the truth, because unless there's an audit, how do you know that the numbers are accurate? You're hoping that your client, had a professional prepare it, and the professional was provided with the correct documents. But there isn't again, unless there is an audit or somebody's reviewing how those numbers came to be, it's not as black and white. So it's interesting to me that you have so much faith in them.
Well, the reason why is because if we think about it, right, we get a W-2. I mean, you have to put it on the return. We get a K-1, right? So these are things that if you're not following, you're going to get a matching notice, right? It's going to be flagged, right? What are you not including? So yes, I mean, someone could be filing fraudulent returns, and maybe that's someone that shouldn't be going through the collaborative process because they're not going to be transparent, which is really the pillar to collaborative is transparency, right? If we feel that someone isn't going to be transparent and boy, they're filing fraudulent returns, I think we're going to have potentially a bigger problem. Maybe
I agree on the fraud part, but in my experience, especially with smaller business and smaller incomes, lots of times the parties do the returns themselves. And it's not that it's fraudulent, it's just sloppy, inexperienced, unknowledgeable, just
yeah,
they think they're doing it right.
I see those all the time.
And if it's easy if they're W-2, I get that. Yeah. But when they're or even if they're then 1099 and and that's when it gets tricky, is when you don't have professionals and you don't have numbers to support it, and the parties are relying upon themselves.
Yeah, and I guess you can like a restaurant business, that's probably the hardest, right? Because that's like a known industry for a lot of cash, right? And cash may not if there are auditors in the room, they're probably cringing. They need earmuffs, right? They're probably there's probably a lot of cash coming through that may not necessarily make its way on the tax return. So, I don't know how that's going to be easy to deal with, but that's going to cause discomfort, right? Someone's going to feel like someone's not being. I have a case right now, and the wife is adamant that there's something fishy going on, right? Because they're not willing to share the financials for the business. So that's a red flag right there. If you have nothing to hide, then, why would you not share the financials? So that's usually a start. Hey, it's a start. Let's say that the tax return and the financials are a good start. But so
I agree with that. So
yeah. So I think that we shouldn't be afraid to use the tools in our toolbox, right? Just as you guys have access to, an allied professional like myself, right? I don't want to be part of the triangle, the diamond here in the collaborative case. I'm outside kind of providing one spouse with the tools they need to make educated decisions. That's what an allied professional on the business consulting and brokerage side would bring. At the very least, just to be able to document that we explored it based on this professional who does this for a living. They told us that businesses like this would sell for no more than this, or there's no market for it. Maybe we do discover there's no one's going to pay anything for that type of business because it's so tied into the owner. Maybe that's what you want to have in your files to document that at the very least, we did our research, we did our due diligence, and we were told that there was very little to no value for us to really account for. And we could sleep well at night knowing that we recommended this option to our client. And I always think, am I going to sleep well at night knowing that I recommended this to a client? And I will lose sleep because I'll just think about it all night because I'm that crazy. But I don't know if you want to add anything here. These people are around, and if anyone wants, I thought I saw David here. David is here. Yeah, and this was his background. David is probably a really good resource, right? Just to pick his brain, even if it's just picking his brain. I'm working with this client and they own this type of business. Where do you recommend I go? But I also have contacts here if you guys need to reach out to anybody. I have, and now there's a designation. It's a Certified Exit Planning Advisor. That's a whole designation, CEPA. And these people, basically that's their job, is to gauge, the health of the business and what it could potentially sell for. And what I like about this particular CEPA that I work with is that he gives the business owners like a survey. And then based on, the survey questions will be like, do you have a strong management team? Do you have a good culture? If it's like, I don't have a management team, culture is I'm just a jerk when I come into work, right? Like, bad culture. So then it affects the multiple. So then he's able to tell you businesses in this industry generally sell for X, but because you scored low on all these things, your valuation is actually here. So what I like about that is that he's able to tell you generally what the market is, but then actually customizes it based on what's happening in that business. So that's probably a more realistic gauge for the valuation.
So Nella, we have a question is,
Yes.
What's the name of the directory for businesses? So if, when you look at what different businesses have sold for in the past.
So I don't have access to it, but I know the business brokers and this business consultant does have access to it. I don't know, David, if there's like a public MLS for this, but I know like if you go on, I think it's LoopNet or something, where you'll see different types of business. And I don't know how many businesses are there.
Typically with these things, these are proprietary databases, and business brokers and M&A professionals like myself, we subscribe to these databases. So yeah, they're usually, obviously pay to play databases, and they're updated regularly, and they're national, and so you can parse them in all kinds of different ways that you need.
And I'll tell you, when I send an email and, hey, I'm working with this client, he owns it's a PR company. She's thinking about selling. Here's a P&L, and I'll redact all the information. This way it kind of goes out, but I'm not sharing any. I redact the names and everything. This guy responds to me in 10 minutes. Yep, there was recently a PR firm in South Florida that sold, and the multiple was this, and then he gives me a range literally within 10 minutes. So at least we have a ballpark. It's like getting a comparable market analysis for your property, right? You haven't sold it, you don't know what it would sell for, but at least you have a gauge of what the market is doing.
So let's move. You had already talked about, helping the client understand the impact of, will they be financially okay no matter what the business does in the future. Let's move on to talk about our next slide, the options to accept the value of the business, because that, I think that then maybe we can get some questions or answers going, because this is what it kind of comes down to on my end as the lawyer and not the financial, to ask the client, these are your options. We're going to, do the business valuation. You're going to accept a number that's proposed. The business gets sold. I mean, there's only so many, there's details of these options, but there's some basic options of what will happen with that business. So let's talk about that, and then also find out from people listening if there's some other ideas on how to address this issue.
Yeah, and this is I'm literally in this situation right now. And because sometimes is this rabbit hole worth going into, right? Maybe it's just been a horrible relationship throughout. Someone just wants to get this over with. It's not worth any more of their time, energy, like, right? There are non-quantitative things associated with this decision that, yeah, we could get a valuation, but do you care, right? Do you care? If we've put a number here and I go back and I run all my models and I keep doing all these scenarios and we've thrown everything into that analysis, plus the kitchen sink, we included you traveling every year, you included gifts to your grandkids, right? We put all the things that you want to do, that you envision yourself doing in this next chapter of your life, and we have a good probability of success, then that's the educational part. Yes, that is there. That's a potential. But is that something that you want to keep investing more time in investigating, when if you just accept this, you will be okay? And that's the beauty of what we do in collaborative. When we all work together harmoniously and we're able to educate the client, they're making that decision knowing that they made that decision. So they're not having regret that, oh my God, you know what, he might sell it for double what I accepted, or he might sell it for, it's irrelevant, right? We kind of gave you peace of mind that if you go with that number that was presented, you're going to be okay. So I think this is where this is important for us to, as professionals, do the due diligence and exercise our fiduciary responsibility to the process and to the client, but at the same time, educate them. This is not going to move the needle. Do you want to spend 6 more months arguing this and, going into a whole valuation process? Or do you just want this over with and you move on, you're able to do all the things that you want to do? So I think it's pairing the two, the exercising our professional responsibility, but also just the client education part.
So let's move on to the next slide, where we kind of did our flow chart as to what the options are.
Yeah,
so we just talked about the personal impact, right? Is it worth it to fight over? Do you want this process to continue? How important is this to you, right? And then the next is the actual appraisal. And that was my question, how this conversation first started in this presentation is, when do you get the appraisal? What is it? How much is it going to cost? When do you recommend that to a client? And I guess what you're saying is it's not necessarily making a recommendation. It's just really laying out all of these options.
Yeah. And that's our job, right? It's just option building. They get to choose, right? They get to choose. That's the beauty of it. They get to choose their door. But at least we're showing them all the doors.
And then the for sale or keeping a percent or an interest in the business. And again, that is the option building. That's what we do. And those are things that a judge may force the sale, but and you have to, that's a whole process into itself. But these are the option building components as to things to do with a business. So I'm interested in people who are listening as to if there's any other creative options or points of interest that they'd like to share when deciding what to do with a business. What's going on out there in the collaborative process?
If I may,
go ahead.
A couple of things. With respect to the appraisal itself, I will say this, it's not a one size fits all situation. So yes, there are appraisals that can cost, 25,000, 30,000, but this is not always the case. And in fact, I mean, I certainly adapt my own scale to the situation. And again, especially in a collaborative scenario where the team is, obviously operating on full transparency, there's the full discussion between all the parties, we're able to assess really the level of detail required in the appraisal and therefore adjust the pricing accordingly. Okay. So that there is that possibility. And we can do that outside of the collaborative as well, but certainly that makes it a lot easier. So again, deciding on what the budget really is for this process, we can adjust accordingly. And by that, I mean, look, again, there's many ways and many different types of level of appraisal and valuation. When I was on Wall Street, we did valuations for pre-IPO companies that were costing around $200,000. Okay. But of course, you can imagine that's a very detailed evaluation, right? But again, for small mom and pops, I've done valuations, 2,000, 3,000. And again, based on the particular situation, and what everyone wants to spend on it. And again, the personal impact part of it here comes in, right, as you were saying, because you might have some opinions about how much is too much to pay for this, and so we look at all that.
Yeah, and I think that's why this is almost like a good flow chart. So what's the personal impact? Very little impact if the value is anything different than what's already been proposed, right? So if that's the case, then do we need to go down this route? Then no, right? Or you know what? If we run the numbers and there is a huge impact, if the value is worth even $1 more, then maybe that's something we can explore, right? So I think ultimately where we come into this process is that education component. We can be the therapist on this side, basically saying, listen, again, it doesn't affect you. And do we need to spend 10,000 to get $20,000 more on your side of the ledger? Is that worth it, right? So I think the education piece, then getting that gauge up front, what is this going to cost? What's the cost benefit to this, to going forward with it? And if, like the case I have now, my client was willing to accept a dollar amount, and I put that number in perspective for her. I said, look, if you do accept 5 million, that's the number because it's a pretty big case. If you accept 5 million, you know what? You're not that worse off, because if the business did sell for this, after taxes and cost of selling and all that, you'd probably end up ballpark in the same range as the number that you're accepting. So I kind of gave her a little peace of mind that she wasn't getting the short end of the stick, because even if it was a sale at that number that she was originally thinking, she's not far from it after taxes. So that's a good perspective for her. But, or you just, you know what, nobody can agree. So keep your 50-50. The problem I have with that is that that's always the bird in the hand versus the two in the bush. So you're keeping your 50% interest because you think it's worth more than what's being offered to you. But what if the business gets run to the ground? You're probably better off keeping your one bird, right? Because now there is no value. Or look at COVID. COVID put so many businesses to the test, right? Viable businesses that all of a sudden, couldn't operate the way they were operating. So I like to also make sure that they're understanding what the trade-off is. You keep that 50% interest. Yes, you get the cash flow going forward, but you're also writing down the potential market drop or market increase. So that's really kind of the thought process, almost looking at it like a flow. If not this, then that. Any other thoughts from the group here? And I love everybody's insight on it.
So what Rosaria wrote is, I'm wondering about family businesses where multiple family members are owners, or it's a longstanding business owned by a family member that includes the divorcing partner. And that is my most common scenario. And that's why I started asking Nella these questions. What do you think? Because that's the So what do we do? Because the family is controlling it. And if the client stays in business with their soon-to-be ex, I mean, they didn't get along personally. How are they going to be business partners? You know, it doesn't make sense. But again, they're afraid or anxious, or they don't know, what does that mean? It's fine if there's enough assets that they're going to be okay. But if there aren't, then people act differently because they're scrounging for scraps, right? And then there's always this, well, I know as soon as we're divorced, that business is really going to make dollars. So what do you do? I think the analysis that we've put out is a starting place for to educate the client as to the options, but that is the hardest scenario. What's your thoughts on it, Nella?
You know, and I think that there are creative ways to buy out a partner, right? Even if it does include multiple family members. You know what? Let's get a sense of what it's worth. Let's slap a note on it, right? So let's be transparent. Let's get a sense of what your interest is worth. And so you don't want me to be a part of the business? Great. I don't want to be a part of the business. So just buy me out. You don't have to do it all today. Let's go ahead and do a promissory note at a, market interest rate, right? So I think people make it a little bit more complicated than it has to be. If that thing is cash flowing, then you should be able to service the note. I mean, we bought out the founder of this business. We had to go to the bank. We get a loan collateralized by the business, and that's how I bought the founder out. So there's definitely, many ways to skin the cat. I don't like to use that phrase, but there's many ways to get there at the end. So it is, I don't know where the time went, but it's 9 minutes to the top of the hour. And wow, at first I worried we're gonna finish this in 20 minutes and then be done. But what other questions do you all have? Is this something that you're facing on a daily basis? How often does this come up in your practice?
Anyone?
If that's it.
That sounds
Excellent. David, thank you so much. It was nice. When I saw you, I got excited. I said, well, here we have a business valuation expert. So thank you so much for joining us and adding some insights. Definitely valuable for all of us to hear.
You're very welcome, Mariana.
It looks like Betsy Vasquez has a question.
I don't see it in my chat. Can you read it for us?
Her hand is up.
Oh, I can't see that.
I can't see
Ellie,
Go ahead, Betsy.
Chime in and go for it.
Hi, Catherine. Hi, Maria and Ella. So I have a case where the husband, he's a COO of a very big business, and he's alleging that there's only how you say a salary. But the thing is, in my research that I'm doing, and we haven't gotten an affiliate or allied on board, but I'm seeing that there's a lot of different LLCs and whatnot going on, and I think they're not being forthcoming. So in a scenario where they're saying that they're COO and they have no stake in it, which in fact he is the founder, but it's a business where they've branched out to different states, and then there's different physicians that have ownership in it, but he's on board from the inception. How do I go about that without, really like ruffling feathers? They wanted to go forward like at supersonic speed, which brought a red flag to me, because the wife is a stay-at-home, doesn't really know anything at all, hasn't worked. And we ended up going to mediation, and then I was willing to, and he didn't have representation, she did. And I wanted to bring in a neutral financial, just to get the, the disclosures and whatnot. And that now escalated, and now they've brought an attorney on board. And I'm thinking now it's a litigator, I'm not quite sure. And I'm trying to push it to collaborative, but I'm just wondering, when you're dealing with something, it appears there's a lot more. So the more I dig in, the more I see. And I'm not even a forensic or an accountant. how do I move forward? So I'm kind of stuck trying to figure out which way to go and trying to keep the peace. You know what I'm saying?
I think Nella would start with all the tax returns.
I was gonna say I'm visualizing the return. I mean, what does he own? Does he have like a royalty agreement, right? So maybe if you franchise a business, maybe you kept you know, maybe there's some sort of royalty agreement if he's the founder, but he you know, created franchises. Or maybe he already got his payout, right? So I would want to know, what did he keep after he franchised the business? He could just be a COO on salary, and maybe he already received his buyout. But I would want to see
I
what's
don't think
going.
so, because he's not even disclosing like any bonuses, and I know that the wife has told me that that's all there. So for every step that I go forward, you know, methodically, you know, because I'm really trying to keep, you know, everything in peace, but nothing unreasonable that we wouldn't do as attorneys requesting, you know, disclosures and whatnot. It's like it's escalating. So every time something is said, and something was said, that they say, oh, and when you're talking about a tax return, there's like a dollar amount, and I'm just throwing one out of 100,000. It appears that income, but it's really not income. And I'm saying to myself, why is that even coming up if I haven't even gotten disclosures?
Yeah.
You know, so that's bringing red flags for me.
Absolutely.
And now the opposing counsel ends up really being a true litigator. That's it. I'm stuck, right? I mean,
Yeah.
I'm still trying to put it out there. Listen, cooperative, collaborative mediation, you know, we already went to mediation. Does your client willing to keep going through this process? You know, so it's like I'm doing everything I can to try to keep the peace, but I don't know. So right now I'm on hold to see when they answer me back, because he just retained counsel.
Yeah, well, you would need to see what sort of agreements he kept with the company, because he could have like a royalty, like a residual type of agreement if he's the founder but create a franchise. You'd have to see what he actually owns, or if he's just an employee with a bonus program that is based on the franchise royalties. I
Right.
couldn't say. Someone has to dig in.
Yeah, and as you're speaking to me right now, I'm actually looking at some business, looking up, and I'm seeing his name all over the place as a registered agent, and I'm looking and looking and looking, and you know, that's not my role. That's what we have, you know, all the affiliates for. And I don't know. It's just a tough call, and I would hate to see something, you know, escalate, because I know the destruction of what litigation brings, and I'm just trying to figure out how to approach this, or you know, because when you have someone of a litigation mindset, and as I've spoken to other, you know, seasoned litigators, they're like, forget it, you know, it's like, you know, we're gonna start, you know, like they're gonna start bleeding the clients, you know, and that's not my wish, you know, for anyone actually. But
it's interesting as an attorney how much sleuthing you end up doing. That's what I do. You know, you Google your own client, the other client, whether it's social media to
exactly
to,
that. That's what I'm doing, Catherine. And I'm saying to myself, you're going through a disillusion. Why on earth, when you have all this stuff and this credentials up on LinkedIn and all this stuff, I'm getting all this information, I would come totally down, you know? So I don't know. So I'm really happy, and I appreciate both of you doing this, because you just came at the right time when I'm at crossroads right now, trying to figure out which way to go. And we'll see. I mean, we'll see. And
yeah, I think Allison hit the nail on the head here, Betsy, for you. Her point is spot on, is stop trying to maybe fit the square peg in the round hole. And if he goes through litigation, the wrath is going to come on him with required disclosure. So maybe that's what has to happen if he's being so sketchy, right? I don't know.
yeah, but at the end of the day, it's a joint, you know, pot. And for my client, you know, if he's going down, she's going down too, and then that's money needlessly spent. I mean, maybe it's silly on my part.
Betsy, we need to move on. Are there any other questions? Thank you, Betsy.
Could I just ask David Morales, hello, if you would put your contact information in the chat? I've never worked with you. I don't know how to contact you, and I would be grateful for that. Thank you so much.
I will do so, Melanie. Thank you.
Thank you both. Any other questions? This was wonderful. if you look in the chat, you'll see some great feedback. I want to thank you, Nella and Catherine, for spearheading our grand rounds today. There are grand rounds to put on your calendar for January 17th and February 21st. Those are the next upcoming grand rounds. Thank you all so much for attending today. There are CLE credits. We will circulate that to you once we're done. Eric, how long will it take for us to get that out?
We can get the number out to everyone today.
Terrific. Good. Thank you. Thank you all. Have a great weekend and rest of the day.
Thank you.
Bye-bye.